We've been waiting for a market pullback, and the selling pressure the last week and a half has been very steady. So we finally gotten what we wanted. We needed to wait for support, and Friday we got a really nice pattern that's set up. This is going to provide us with lots of opportunities over the course of the next few weeks. I'd just like to point out that I'm recording these videos to help all of you out. You're trying to find your way, and I hope that this content has been useful to you. If it has been, please share it with other traders, help them, and help me grow the YouTube channel. Like my videos, and by all means, subscribe to my YouTube channel so that you never miss these updates. So let's take a look at the price action that we've seen over the course of the last week. And this breakout right here, gaps higher on very light volume are fairly easily erased. And I've mentioned this in my previous videos. This was in anticipation of really good earnings announcements from mega cap tech companies and a Fed rate cut. So we got that Fed rate cut here, and this was a buying climax. Since that Fed rate cut, the market has pulled back considerably. On Friday, we got a nice sell-off below AVGO. That's calculated based on triple witching. And you can see that the 50-day moving average, this purple line, was also breached. So what happened on Friday? I'm going to get into that analysis, and I'm going to actually show you the price action that told me that a bounce could be pending. I'm going to take you through the play-by-play. I'm going to show you my comments that I posted with timestamps in my chat room so that you can see this is actually what we were doing. So as the day unfolded, you can see that the market was able to rally above the 50-day moving average, and it closed above VWAP. This left us with a long bullish hammer off of a relative low. What has that pattern produced previously? Well, let's take a look. Well, there's a bullish hammer right there off of the 50-day moving average, off of a relative low. Ooh, that worked out pretty well. There's another bullish hammer. Hey, that worked out pretty well. There's another bullish hammer. Ooh, that one worked out well, and so did that one. And this is not quite a bullish hammer because technically the close would have to be higher than the open and it would leave a green candle. But for all intents and purposes, we had that nice tail down here and a decent bounce back above AVWAP, and we're back off to the races. Hey, there's another one. These bullish hammers have been really nice entry opportunities for us. And at a time where we've been waiting for something to set up, we finally have it. Plus we have seasonal strength working in our favor. From a technical standpoint, don't pay attention to the headlines. The headlines are as bearish as you can possibly imagine. The sky is falling, the market's going to crash, credit crisis, people are losing jobs. I'm going to talk about jobs in just a little bit. When we are short-term traders, we ignore the fundamentals. We ignore the headlines. We pay attention to what we're seeing play out in the market. We follow price. Price is truth. And this is a really good pattern that we can lean into next week. We're going to be taking a look at some searches. We're going to find some trades in just a bit. Let's go back and take a look at some of my recent picks. J&J is a trade that I want to highlight because this came out back here about 3 weeks ago or so. We bought some longer term November 21st calls. We bought the 190 calls and we sold the 195 calls, and we did that spread for a debit of $3. The stock has pulled back, but you can see that it held up fairly well this week during the market decline, and it's been able to find support above the 50-day moving average. This spread is a loser. What am I doing with it? Nothing. What am I going to do with it? I'm looking for a little bit of a pop in the stock. I'd love to see it get back above AVWAP, and I will be placing an order to sell the spread for $3 where I entered it. I'm happy to scratch the trade at this point. It hasn't worked out. I'm going to try and mitigate my losses, and if I can't get out at $3 as we get closer to AVWAP, if we find resistance at that level, then I'm going to get out for whatever I can. Let's say that I get out for $2 All right, that's a 33% loss. Not a big position. That's how I'm going to be playing this particular trade. I would like to see a bounce in here. Now, I've also highlighted AVGO. That was a bullish put spread that we tried to execute, and the stock took off on us. This is where the recommendation came out back in here, and we were trying to sell all the way down to the 325 strike price. The 325, 320 bullish put spread for $1. Stock took off. Never had a chance to get that trade off. But look at how well the stock has held up. Would I do the spread now? No, it's too late. We wanted to enter it here, and you can see that earnings are coming up in about a month or so. So there is still some time on AVGO to do a bullish put spread if you like this stock. I do. I think it held up really well. Anything down here around that 325 level, which was the low from this candle, almost where the 100-day moving average is right now. I like that trade. I think that's going to be a good trade. I just don't think you're going to get $1 credit for it. I think you're going to have to settle for considerably less. And then last week, I showed you BE, which BE could easily be my pick today. And in fact, when I saw the market rally on Friday, I did sell some out of the money puts on this stock. Look at how well the stock held up. It didn't even flinch during that market decline. That's the kind of price action we want to see, because it tells us that buyers are in there aggressively accumulating shares. And you can see the earnings announcement here. Stock gaps up. It preserves the gap. Like I said, it didn't even flinch. So what did I do on this trade? I went all the way down to the 116 strike price. So let me see if I can bring up the options chain, and we'll take a look at those options. I sold these puts, the 116 puts that expire in 2 weeks, for $5.90. Net, I'd be long that stock somewhere around $111 in 2 weeks. Would I be willing to take shares of that stock? 20% lower than where the stock is right now. It's already weathered a market decline beautifully. If this stock was going to pull back, this is when it would have happened. Didn't even flinch. Man, do I feel good about that trade. And hey, if you're going to let me buy that stock at $111, bring it on. I will buy it all day long, because the market loved the earnings. And look at the strength in this stock. APLD was the other one that I showed you. And you can see the options that we were selling were way below that 50-day moving average, all the way down here. Stock held its own when the market was selling off hard. I still like that one as well. We're going to be looking at similar types of situations in today's scans, and we're going to run a few searches. I'll show you how I construct them. I've got a couple of other stocks that I really like. Any of these really would have been playing out well. And this is the strategy that I've been using right now. Why? Well, I did a video last week. Please make sure and watch that. I talked about how the market drives all of our trading decisions. I explained why right now I'm favoring this strategy, especially when the market was up here making a new high. Remember the video that I did last week, BE and APLD, those picks came out way up here, and we were selling out of the money puts to distance ourselves from the action, because in the event that the market pulled back, and we felt that that was very possible, the stock would have to drop a long, long way. And we had seen relative strength in those stocks, and we didn't feel that that was likely. That's what gave us confidence to execute that strategy. It works beautifully for swing traders, and it's a low maintenance strategy. Look at the drop that we've had in the last 4 days alone, and look at how well those stocks held up. Excellent strategy, gives us plenty of breathing room, and we're not worried at all about what the market's doing. So we're going to look for a similar type of situation today. What happened last week? What's the market review? Well, we've gone through a little bit of the technicals. As far as the news that hit last week, well, we had the shutdown continuing, which, to be quite honest, it's gone on a lot longer than anyone thought that it was going to last. And it seems like politicians are digging their heels in right now. I don't see any solution to it. That could have been one of the reasons that we've seen some market weakness. We don't have any economic data points right now. The government is not producing any data, so we're kind of flying blind in here. We don't know what the jobs scene is, although we did have a couple of private companies that announced their job statistics this week. ADP announced that there were 42,000 new jobs in the private sector during the month of October. That's not too bad. Now, it's not robust, but at least it's not in negative territory. Minus 32,000 is what they reported in September, so that was a bit of an improvement. But the nasty number that came out on Thursday was the Challenger Grain Christmas survey. So they survey companies and they ask them how many planned layoffs they have. That number had gone up dramatically in October. I think it had gone up by about 185,000. It was a big number. Lots of planned layoffs. And in fact, the number of layoffs that we've seen in October, you'd have to go back to, I believe, 2011. So over 15 years ago to see a number that was this bad. What makes it a little concerning is the fact that this is typically a time when companies don't want to lay people off. It's the holiday. They don't want to give people bad news. So when you see a big number like that, it's unusual and it's a little bit concerning. For the year, first 10 months of this year, those employment statistics have been really, really dismal. This is one of the worst years that we've seen, in the last 6 or 7 years since COVID. Most definitely. That's not particularly good, and I see that as current news as well because it is a survey. We did also have ISM services that came out. That came out at 52.4. Services are 80% of our economic activity, so I pay a lot of attention to that number, and it is a purchasing manager's survey. Surveys are very current, and I pay a lot of attention to them. That was a pretty good number. It puts us squarely into expansion territory. 50 is the expansion contraction level, and 50 is actually where the number came out last month. So there's been some improvement. So not a lot of economic data points to really lean into. But as far as the jobs numbers, I'm a bit concerned with what Challenger had to say. So what do we have for the week ahead? Well, we've got the shutdown. That's going to continue. Supposedly, Republicans and Democrats had a deal that they were working on, and I believe that the Republicans have a deal that they've been working on with a handful of Democrats. They only need to get 7 of them to cross over to get the government opened up. And I believe that's what they're trying to do right now. Who knows? This is getting really nasty and it's starting to impact economic activity for sure. We're seeing that they're going to be 20% of flights are going to be canceled because of air traffic control. So we have food stamp money running out shortly. People that haven't been paid for a very long time. I hope that DC, are you listening, DC? I hope you get the government open. This is ridiculous now, and I think everyone's getting a bit tired of it. If the government does open back up, I think the market is going to like that news. So there's not really a lot that we're looking at for next week in terms of economic releases. And earnings season is actually winding down as well. The earnings reaction, so earnings have been good, but good is expected. Those good earnings releases have not produced any kind of market rally in here. In fact, we've seen a little bit of a drift lower. This is like the air getting let out of the balloon. As far as the technicals, I'm pretty excited by what I see here. This should be a good opportunity for us, especially from a seasonal standpoint. So we're going to have year-end seasonality. I'll tell you that this is one of the most powerful trading patterns that I've had in my lifetime is November and December. I mean, they tend to be such good, powerful months. And the reason for that is that asset managers want to mark up their portfolios into year-end. They have more assets under management then, and they get paid on a percentage of assets under management, so their bonuses are bigger. Wall Street's happy. Everybody's making a ton of money. People are opening their statements at the end of the year going, yay! That's why the market tends to rally, and I believe that we're going to see some follow-through buying in here. Now, as we get into November and December, what typically happens is you get this really light little volume type of rally, not a lot of conviction. It's just little gaps higher, tight intraday ranges. I'm expecting that we could have this type of price action into year end where we just drift higher, and it's kind of a seller's boycott. So that means that if you're going to put positions on, this is the time to do it. Sell your out of the money bullish put spreads, sell your out of the money naked puts. If you want to buy some in the money calls that span December, so you're buying in the money January options with the intentions of just buying it and letting these strong stocks just drift higher, this is the time to do it. Okay, this is a really good pattern. If you're only a stock trader and you don't trade options, no problem. The way that you do this is you enter with a nice position. It's a starter position, and what you'll be looking for is you want to see this AVGO level hold, meaning you can, if you don't have AVGO on your charts, you can use the open from Friday. You want to have that preserved. It's okay to test it, no problem there, but you take and put your first leg on, and then what you'd like to see is you'd like to see the market close above the close from Friday. You'd like to chew away at half of this long red candle here, and you'd like to close above that in the course of the next few days. If you see that, then you add to your stock positions, and you're looking for them to have relative strength and to move higher as well. Once we start moving through this horizontal level, that is the 674 level. That was the previous high. When we close above that, you add to the position. So you're building, and you're never freaking out because you don't have a big position that you put on all at once. You're adding on confirmation. It's how you do it. And when you do that, your average price is always going to be lower than the current price. Worst case scenario, if the stock pulls back, you're going to be able to exit for a scratch. Now, that's not going to happen if you're picking good stocks, but that's what gives you the confidence to build these positions into year end. Let's take a look at the price action that we had on Friday, and we'll go into a 5-minute chart. And there you can see the gap down. VWAP happened to coincide pretty dang well, actually, back in here. This is about where the 50-day moving average was, around the 665 level. So keep that in mind. But the market gapped down. We had this choppy back and forth type of price action right in here. Market couldn't decide what it wanted to do around that 50-day moving average. And then it gradually started to lose its bid. But you can see this whole process on the way down was very hard fought. Little sell-off, rally, little sell-off, rally, little sell-off, rally. Well, that tells us that buyers are still engaged, because if they weren't, we would have seen long red candle, long red candle, long red candle, long red candle. I mean, it would have been a lot of this and not a lot of this, mixed overlapping candles with lots of tails and wick. This was tiny bodied candles, a lot of price compression on the way down. That was a warning sign. What I had mentioned in the chat room, and I'm going to put up my chat room. I don't ever talk about my products. I don't promote my products. I'm trying to educate you, but dang it, I'm going to talk about my products. I'm proud of what we do. We have a great chat room, and if you ever want to come in and see if all of this is legitimate or if it's just a bunch of fluff, then come in, take the free trial. We've got a 2-week free trial. I don't even ask you for a credit card. I don't care if you sign up or not. Come in, check out what we do. You'll get to see some of our trading real time. I'm going to scroll back in the chat room so that you can see some of my earlier comments, but I do actually have pre-open market comments so that everybody knows what I'm looking for through the course of the day. That's our game plan. So let's go back to maybe the first 90 minutes or so, because within the chat room, I am mentioning what we'd like to see. And so early on, I'm telling everyone that the only way that I'll get short is if I see a nice, decent little bounce that falls short of VWAP and that rolls over and heads back down. But otherwise, I'm not going to be shorting into these tiny little bodied candles. And you can see here, this is at 10:54. So now we're 2.5 hours into the market, and the market is selling off. What do? What's my post? It's a reminder. It's a reminder that don't take your eye off the ball. Up here, we were hoping for a market pullback. Now we get a market pullback and everybody goes, that's it. I'm bearish. You flip just like that. Here you're waiting for a pullback so you can buy. Here you're bearish. How do you reconcile that? No, keep your focus, because this is what's going to happen. And I showed everyone, this is where your focus needs to be, okay? We're waiting for a pullback, seasonal strength. Market has been in a strong go, gotta have it rally. And here you are entertaining bearish thoughts. Focus, or you're gonna have the bounce and you're gonna be trying to exit your bearish positions in here for a loss when you should have been just sidelined, waiting for opportunity, knowing that you wanted to buy, and then you're all over the opportunity and you're adding. So this is early on in the day. I wanted to remind people what they should be looking for. As the day progresses, let's let this bullish cycle run, get back to VWAP. Here we go. At 3 hours into trading, these are 4 nice stacked green candles off the low of the day. 1 green candle, that would not have been a problem. That could have been a solo that they squashed right back down. 2, that gets interesting if they're stacked. 4, that's pretty hard for the market to pull off unless there's some bona fide buying. As we continue, we're continuing to look. I did take a short position. I lost 5 points on the S&P, and that was just below VWAP, and I'm going to show you that in just a second. But I want you to see these. I like this move moving higher. This is at 12:41, so now we're 4 hours into trading. We had the 3 nice candles. We've been able to make it above VWAP. Here's what I would like to see, okay? And I'm telling everyone exactly this is what we want to see, and this is the time frame that we want to see it in. This is real stuff. This is what we do every single day. And I'm telling him, we want to jump off of VWAP like there's no tomorrow, like the market's been jabbed in the butt by a cattle prod. We're going to test it. We want to fly off of it. And if we see that type of price action, we're probably going to rally all afternoon. And they gave me a little hard time in the chat room about that, so we had some fun with it. And let's take a look at what happened. So this is where those comments were coming out. And I'm saying, okay, these 3 green candles off of that low, this is pretty hard to manufacture. I did get short in here. I felt that there was a good chance for the market to sell off here. We had a bearish 1OP cycle. As the market sold off, I had a stop in place because I felt that this move, it needed to happen quickly. 1, 2, 3, we test the low and try and take it out. If I didn't get that type of speed, it would tell me that sellers don't have enough punch to knock it down and that the bid could be growing. Well, that's exactly what happened. I stopped out for a 5-point loss. No problem. In fact, now I'm getting excited because this looks like it could be a legitimate rally with a higher low double bottom. Beautiful. So we get this rally. This is where my comments were, where I said, hey, I really like this move higher, okay? And it's happening early enough in the day to where we've got a chance to have a good afternoon rally. The market pulls back, and this is where I said, all right, folks, we're testing the 50-day moving average, and it happened to coincide with VWAP. This is where we get excited. Bullish hammer right here. How did we come off of that VWAP? Just like I said, like the cow prod in the butt, fly off of it. Not poke around, waffle around, above it, below it. No, we need to fly off of it. Why? Why is that so important? Because it shows us that buyers are aggressive. Urgent. I'm not going to have another chance to buy at the 50-day moving average. I got to have them now. When you have that type of reaction and that type of urgency, you start stacking green candles. So I got long in here, and I took, I believe, a 25-point gain on S&P futures, bought them again late in the day, took another 20 points there. That's how the day played out. But it's the speed that has to happen. Very important, because that's the urgency. And when there is urgency, then our ability to predict future price movement increases dramatically. That's how it played out. Take the free trial, for crying out loud. It's not going to cost you anything. I'm not collecting your credit card information. You'll have access to all my education throughout the course of the 2-week period. I've got a huge course. It's taken me 3.5 years to write. It's only available when you take the trial or you're a member, you're going to be able to see these trades. I'm doing swing trades. I'm trying to post a swing trade almost every day. In the last 2 months, I've had so many of these naked put rights expire worthless. It's been a fantastic strategy. Come in, check it out. This is Option Stalker Pro, by the way. This is the software that I developed to trade this system. So let's take a look at a search. I'll show you how I constructed it, and let's see if we can find a trade. So what would I like to see? Well, I'd like to see a stock that is strong relative to the market on a D1 basis. When the market's been selling off for the last 10 days, show me a stock that's been strong relative to the market. What has been holding up? Also, show me stocks that have good option liquidity. All right. Hey, let's put another variable in here. Let's look for options that have implied volatility of 40 or higher. I still like selling put options, okay? I still like that strategy. I'm not gotta have them crazy about the market right now. I will be day trading from the long side next week. So yeah, let's mark that as well. This will allow us to distance ourselves from the action by selling these nice, rich put premiums on strong stocks. Show me a stock that closed above VWAP on Friday. Well, it better be able to close above VWAP. That's a pretty small hurdle, and that'll help me filter out some of these stocks. Show me a stock that's still above the 200-day, 100-day, and 50-day moving average. Okay, so we had a weak period. A lot of stocks closed below these moving averages. Show me a stock that is above AVGO, average weighted price since the earnings announcement. Okay, so it had earnings announcements, and let's mark that off. Stock reported in the last day to the last 20 days, fairly recently, and the stock is above that average weighted price. Sweet! These are my criteria. These are my search results. I'm going to have some really good search results in here. And looky there, you got BE right in here. I love it. That was a nice one. But because I gave that to you last week, I really like this one. I think this is a decent long INSM. Love the chart. Options aren't very liquid, so I'm not going to do anything with it. But I love this pattern where the stock runs higher, preserves half of the long green candle. And what did it do during the market decline? It held super strong. I think INSM is going to continue to move higher. As I continue to go down, WDC. I like this one a lot. There's your earnings announcement. There's a gap up. The low from that earnings announcement was preserved. I usually like to give these about 3 days or so to let the dust settle, make sure that the gains have been preserved. Boy, oh boy, have they been preserved. Are you kidding me? Look at the market sell off, and what does this stock do? It's going higher. If they were going to nail this stock, if this were all fluffy after the earnings release, if this were all fluff, they would have nailed this thing. They would have played whack-a-mole with it. They tried, but the buyers were stronger. They're accumulating shares. I like it. Let's see what we can get. Let's take this candle right here and see that high is 137. So the 140 strike, let's take a look here. The low is 148. Let's see what we can get. And we know the option implied volatility should be pretty good on this too. And let's go out into November 21st. And we'll go 2 weeks out. So we're looking at the 145s maybe. Let's see what kind of premium we've got there. Wide bid-ask. This is another good reason. You don't want to navigate two bid-ask spreads when you're doing a spread. I'm willing to buy the stock anyway. Why do I want to go pay for further out of the money puts if I'm expecting all of them to expire worthless? I don't need to, and the bid-ask spreads are too wide. So what would I want to get here? Gosh, it's 180 bid. If I could get $2.30 for that in 2 weeks with a high degree of probability, would I buy the stock down here at, say, $143 after what I've already witnessed this week? Yeah, I sure would. Well, how can I maybe get a little bit more premium? Pete, What are you going so far out of the money for? Can't we go a little bit closer? You know, you said the market, you got this bullish hammer, you got this really good looking stock. Can't you go a little bit closer, get a little bit more money, make a little bit bigger return? Yeah, okay, we can do that. It's your money, it's your risk tolerance. So let's take a look. There we've got the low is somewhere around $150. So let's see what we can get for the $150 puts. Well, there we can get $3.60 for it. Maybe you can even get $4 for it if the stock pulls back just a little bit next week. So now you're long the stock at 146. That's your pick of the week, folks. I love it. This is a really good trade. I did have one other stock that I like. This is your pick though, okay? IONQ did come up too, and I think that maybe the volatility filter knocked it out, but I kind of like this also. All right, so this has been a high flyer. You've got this breakout right here that coincides with the 100-day moving average. You've had post earnings, and you can see the stock has held up quite well. So anything down here, let's see, at the $48 level or less would be attractive. And this one should have some pretty good option premiums to it. We're only going out 2 weeks. We can go out farther in time. If we feel that the market's going to float higher, you can go out into December on WDC if you'd like to, okay? It's really up to you, because when you sell put premium, you do have the risk of reselling. So now I got to resell it again, and I might not be able to get the premium that I wanted. I like to keep it fairly short term to take advantage of accelerated time premium decay, and I'm always rolling my positions over. So let's go down to the $50 strike price, and there you can see those are a $1.30 bid, and the stock's all the way up at $60. So you'd have to lose $10, and you would still be all the way down here below the 100-day moving average and below this horizontal was resistance, now support. That's a really nice return. That's going to be somewhere in the 6% return 2 little weeks. That's what I've got for you this week. Please make sure to subscribe to the YouTube channel. Give the video a thumbs up. I am going to be recording educational videos like I do every week. I need content. I need ideas from you. Tell me what you want to learn. I'll record the video. I'm trying to post them on Wednesdays or Thursdays, so watch for those videos then. Trade well. This is a really good opportunity. I like this bullish hammer. We may have a little bit of a retest in here, but I'm not expecting anything big when it happens. You want it to be very brief, little tiny pullback. Blam! They come in and buy the heck out of it again. So when we see that type of price action, we know that buyers are excited, and I'm looking for some follow through to the upside. And this could be your last really good opportunity of 2025 to get long and take advantage of a year-end rally. Thanks so much for watching, everyone. We will see you soon. See how we trade live every day and take our 14-day free trial. I won't even ask you for a credit card. Dive into the action and trade alongside of us. Your downside is that you get some great trade ideas. Your upside is unlimited because you'll learn the skills that you need to be profitable. Check out OneOption.com and see for yourself.